Who's that guy in that old shirt? Who must be the fence expert? Who's that guy in that old shirt? Who must be the fence expert? Time to talk about the fences. It's time to discuss operations and expenses. It's time, it's really time to elevate small businesses. It's time for Joe to drop his knowledge. It's relentless. This rhyme of mine is getting a bit ridiculous. Here we go. We're live with Joe. Enjoy the show.
Guys, arguably one of the most important parts of running a contracting business, whether it's fencing, whether it's roofing, any home service contracting business, is going to be your financial dream team. In today's episode, we're going to cover the conversation in a two-part series. Today's the first part. We're going to talk to you about CPAs, whether they're preparing your taxes or maybe planning for your taxes, also the difference between them and a bookkeeper and accountant, and why there's an important distinction there. So without further ado, let's meet Andrew and get into the conversation. Andrew, first and foremost, appreciate you making time available. You're very gracious with your time. Anytime I've got a question, you're always there to answer it. I want to begin this interview by saying thank you.
Man, thank you for having me on. I appreciate it. I've always enjoyed. I've been on a handful of times now. It's always a lot of fun. I appreciate you having me on.
Of course, guys. We've covered a lot of content with Andrew, and if you've got any sort of financial questions, you should absolutely look back at any one of those. They all stand up. But Andrew, for like maybe the 3 or 4 guys that haven't watched any of those episodes or maybe aren't familiar with you, a brief introduction.
Yeah. So I'm founder and president of Atlas Financial Strategies. We're a fee-based financial planning and business planning firm who specializes in working with business owners, and take that a step further to say we specialize in working with contractors.
Very good. And that's probably an important distinction, right? A lot of businesses are the same, but I'd have to think that contracting businesses may have just a few extra quirks that a different business might not.
Yeah, there's a lot of principles that can apply to any business of any kind, but yeah, you can narrow that scope even further to say that contractors especially have kind of a certain set of principles that are pretty specific to them.
Well, and that probably relates to our conversation today, right? So the conversation that I want to have today is really building your financial dream team. Right? So we've talked a lot about some financial principles over the last several interviews of some basics on what to do, but maybe we haven't covered specifically the people you should have in your corner, financially speaking, that are looking out for your best interest, but also the best interest of the business.
Yeah, I hopefully most everybody listening is working with a good CPA, and we can kind of break that down even further because, of course, just like with any industry, there's a big difference between a good CPA and everybody else, right? So,
sure.
But hopefully everybody here is working with a good CPA. But I find a lot of times business owners are like, I got a CPA, what else do I need? And I'm like, you need a lot more than that. First of all, you're probably not getting everything you think you're getting from your CPA. And this is not meant as a slight to my CPA friends.
Sure.
But there's every different type of professional views things through their lens, right? So the CPA through the tax and accounting lens, the financial planner through hopefully the financial lens, the long-term view lens, and the attorney through, depending on what type of attorney, but a lot of times through the risk mitigation lens, or the legal lens, depending on, again, what type of attorney that they are. But I'm under a fairly strong belief that most business owners should build a team of professionals, that being a good CPA. And we, like I said, we'll kind of dive into that. Probably a bookkeeper as well. A financial planner, and there's a big difference between a financial planner and an investment manager, which is arguably 95% of the industry kind of falls under that category. And I wouldn't necessarily, even if they have the financial planner designation, I don't know if a lot of times if they're acting as what I would call a good, well-rounded financial planner, and then attorney. And from a personal standpoint, you probably need a good estate planning attorney. From a business or professional standpoint, you probably need a corporate attorney of some kind. And there's even kind of niches to that of people or attorneys who specialize in construction law, right? So, and everybody kind of has their role on the team. And I will say this, and this from my experience, somebody has to act as quarterback or coach or what have you. Somebody has to act as the nucleus of the team. A lot of times that responsibility falls upon the client, which is you. And I'm like, the not great example that I give, but the example that I give is like, it would be like me being the captain of a cricket team. I don't know anything about cricket. I don't know the rules of the game. I don't know anything about it besides the funny bat and the ball that hits the ground first before you hit it. I don't know anything about it. And that's the case for most business owners is, we just aren't taught these things. We don't speak the language, so to speak. So a lot of business owners are kind of by default acting as quarterback of the team and making sure. And we've just seen a lot of times that lack of coordination, communication, and coordination between everybody on the team, because what can happen sometimes is everybody's acting in their silos, right? So you got the CPA living in his world, financial planner in his, attorney in his or hers, right? And they're not necessarily, there's not a lot of cross-pollination, so to speak. And we have just seen that allows a lot of gaps to be left in the plan, and a lot of things to kind of slip through the cracks. And we've been able to catch some things that shouldn't have slipped through the cracks. And then sometimes, we can kind of share some stories of some things that have slipped through the cracks that have ended up, not good if somebody would have only acted as quarterback. So as far as our firm goes, we'll generally carry that torch and act as quarterback, coach, what have you, Sherpa, whatever of the team. But you don't want it to be you most of the time.
Well, because I think we need to recognize that we need someone that's a professional at that thing, right?
Sure.
Just in the same way that I would not file my own taxes because I don't know the intricacies of tax law and how it applies to a contracting business. I probably shouldn't be quarterback either because I don't know the ins and outs of, and I don't have the experience. I don't have the reps in seeing these things over and over. We don't know what we don't know. Right. And the sooner that we can recognize that and fill that gap with somebody that does know that thing, the better off we are for it.
Yeah. Like I've never built a serious fence, you know what I mean? Not anything that would stand up to y'all standards. And so, I mean, if I were to show up on the job and start trying, I can look at what the other guys are doing and, probably pick up a few things, and I know how to nail a board.
Yeah.
But I mean, to the trained eye, you guys would be like, this guy is screwing up and doesn't even know it. Right. And so kind of the same thing on the professional side. And so, I mean, we can kind of take those one by one and kind of talk about what those professional roles are or should be and what they do and kind of the distinctions between those things, which I think would be very useful and we can start with CPAs if you'd like, but I will say the number one complaint we get from our business owner clients about their CPAs, and I mean, almost without exception, I'd say 9 out of 10 that come to us will complain about their CPA and say that, I'm really looking for like some tax planning, like some proactivity and stuff. And instead of come November, December, whatever, it's like, hey, give me your stuff. I'll let you know how much you owe. And it's like, all right, well, couldn't we have met throughout the year and talked about what we could have done? And, the laziest and worst tax advice I hate, because I just think it's so lazy and reactive, is, you'll give your CPA all your stuff at the end of the year and they'll say, hey, you made too much this year. You need to go buy something. And you'll end up, go spend $100,000 on a vehicle or a piece of equipment or something like that. And a lot of these guys will go out and buy themselves a nice new truck and they get the tax deduction for it and all those things, which I get. But you're kind of using girl math if you're doing that. And so, I mean, for a lot of the guys listening, if their wife goes to Target or their favorite store and they come back and excitedly tell you about the thing that they got on clearance, the first couple things.
It was on sale.
It was on sale. It was almost free, right? We would have been foolish not to buy it. So, right. And, and so the things that we're probably thinking as our wife is telling us this is like, all right, well, but how much did you spend? And did we need this thing? So if you're buying a $100,000 truck to save, let's say $30,000 in taxes, you still spent $70,000 on a depreciating asset that doesn't improve the cash flow or value of the business in any sort of meaningful way. So you're doing the same thing.
That's if you paid cash on it.
That's if you paid cash.
That's not if you financed it.
That's right. So we're doing the same thing that we get aggravated at our wife for doing, but on a much grander scale, right? So, so there is a very big difference I find between, a good CPA. And again, just like in my industry, I think that things could be done a lot better on the whole. And same thing in the tax preparing accounting world. I think there's the traditional model, and I'm not a CPA. So I'm not, and this is not meant as I have a lot of really good CPA friends. But I think there's the traditional model, which is they get paid for filing your taxes, right? So give me your stuff.
Sure.
I charge this much per 1040 and this much per schedule this and this much for that and this, right? And they might charge hourly or something like that for extra, little things, but there's not any sort of good congruent program a lot of times that is proactive and throughout the year. And again, I'm largely I find that to be the case, where that's what I think most business owners want is they're like, hey, I need somebody, I need to meet with them periodically. We need to look at my stuff. We need to project some things out. We need to look at what can I do proactively to help my situation, as opposed to, hey, let's look what happened over the last year, see what we can do to save you some taxes based on what has already happened, instead of, hey, let's take some proactive steps, do X, Y, and Z. And so again, kind of by default, because of the team that we put together, we kind of fill that role sometimes as well, is to kind of be that proactive tax planning arm of the group. We're not going to file taxes. We don't, that's not what we do. But
Sure.
A lot of clients will end up coming to us with questions that we're happy to help with and we're happy to answer, that really should be answered by their CPA, or their CPA should be kind of proactively helping them with. So I'm sure you have stories that you could share, and I do too. I'll share a few here in just a moment, but I'm sure you have a few.
Yeah, I think that's the most important thing, though, is the key takeaway here is make sure there's a conversation happening throughout the year about the upcoming tax filing, right? Hey, here's what's going on in my business. Here's where I think we're going to end, both in terms of income and expenses. Here's, we've got some big purchases coming up. Should we plan those out, or should we do those this year or next year? Whatever the conversation, if you're not having those conversations, one, you should probably ask about it, right? Say, hey, I'm looking for more than preparation. I'm looking for some planning. Is this something that you're comfortable? Is that a conversation you're comfortable having? Because I feel like and this is a fence guy, right? This is from a fence guy, but I feel like there's CPAs that are most comfortable filing taxes, right? Mm-hmm. Hey, let me fill in the boxes and I can find deductions that you don't know about. So I am 100%. Incredibly valuable, and I'll make sure they get done correctly, and I'll make sure everything is copacetic. But in terms of like the planning aspect, they're just not as comfortable in that realm. And that's fair. That's absolutely fair. Just in the way that fence companies specialize. We don't do a lot of vinyl because in our market, we don't do a lot of it. We don't do agricultural fencing because we're not comfortable doing that. I think you see the same thing in really any profession. So you wouldn't want your fence company that doesn't specialize in something to try to do something they're not comfortable with. And in the same way, probably have that same thought around the CPA.
Yeah, I think you're 100% correct. And so a couple things. A lot of CPAs, or most of them, are happy to answer questions if you bring questions to them, but they're not going to proactively, bring things to you to say, hey, let's work on this. And,
Yep.
And I think you need to have, so I find a lot of business owners will kind of do things that, in my view, they should have ran by somebody on their team first. Let's say their CPA, let's say somebody like that, like us, or whoever on your team that's your go-to person for those things. So like before you make a big purchase, before you do XYZ, whatever it is, that you have somebody that you feel comfortable with, and hey, I need to bring this to them first. We're going to have a conversation about it, and then I will do whatever I need to do based on this conversation I had with them, instead of doing it, and sometimes doing it in not the best way. If they would have brought it to somebody first on their team, presumably they could have maybe done it a little bit of a better way. And now we're trying to fix a problem or kind of scab over something as opposed to doing it right the first time.
And maybe you created a whole different problem for yourself. Rather than running it past somebody that knows which questions to ask. The buying a vehicle is always, it's the go-to or the piece of equipment, but then the contractor will go finance it. So it's like, well, actually, so you took the savings today, but it's actually going to end up costing you more over time. And as long as you understand that trade-off, beautiful. But don't think that you've woven a magic wand and had the end all be all solution sort of
right.
thing.
Yeah. And I mean, it can be things like, we find sometimes people accidentally will commingle funds either between their personal funds in the business or between various business entities, and unknowingly. And again, like, there's what makes sense to the average person, which I will say 100%, makes sense. Like, yeah, I should be able to do this. But like maybe legally or from a tax perspective or whatever, it's like, all right, well, yes, that makes sense conceptually that you should be able to do this and no big deal. But also you just kind of cross this line. So I'll give you a really good, easy example that will apply to everyone, business owners or not. Well, I say everyone, anybody that owns real estate. So, I'll run into a lot of clients that they'll have a investment property that they own in an LLC, and they think because it is in the LLC that, hey, I'm good, right? I've created this golden, I'll use a Trump term, the golden dome, right, around this business entity, that like I'm protected, it's good, all of that. Well, that's the first step, but you also have to handle it correctly. And so what I mean is, let's say you create this LLC that owns the property, and let's say it's a rental property, and all the income and expenses go to and come from that business entity's bank account, right? Now, let's say that the house needs a new roof or a new AC or something like that. There's not enough money in the business bank account to pay for that new roof or AC. So you're like, well, it's flow through, it's all my money anyways, kind of a thing. So I'll just pay for this new roof or AC with my personal money out of my personal bank account, personal credit card, whatever it is. Well, you have now commingled funds. So any attorney, if somebody were to get hurt on that property and try to sue you, which is the whole purpose of the LLC, limited liability company, is to separate that liability from the business and from your personal assets. You have now commingled these funds, and now any attorney fresh out of law school could prove to a judge, there's no financial distinction between this person and this business entity, and they must be treated as the same, and now they can come after personal assets. So same thing between business entities. Sometimes there are expenses or employees or money, coming to and from that. Again, nothing nefarious. They're not, they're just, you're like, well, they're all my businesses, so I should be able to take, X amount of dollars from this business. And even if if it lives in their mind as a loan, that's like, yep, no, I'm just loaning it from this business to that business, and this business will pay that business back. And, everything will be, I like the term used, copacetic. So everything will work out. Right. And that is true. And that makes total sense. However, on paper, you are commingling funds, and this separation of liability that you think you have now no longer exists. So we see that happen all the time. So I say that to say, before you make some of these decisions that even if you think are rather innocuous or not a big deal, just run it by your CPA or your financial planner or somebody on your team that you will have the answers to that.
Because in that scenario where one company is lending to the other, running that by a professional, they might say, and consult your professionals, but they might say, hey, these documents can do it properly, right? It is possible,
100%.
But it needs to be done in the correct way, in the correct order. So by checking these boxes, you can accomplish what you're wanting to do, but you're still maintaining, if you're wanting separation or protection or whatever, you could still accomplish that. You can have both things. You just have to do it in the right way, in the right order.
It's just got to be kosher. It's just got to pass the sniff test. So that way, if anybody comes and questions it, or if there's a lawsuit, or if there's a whatever, that we're not getting caught up in stuff that we didn't know we could get caught up in. But yeah, so to your point about the CPAs and asking them those questions, we encourage people to interview around, right? So we tell people, like, if they come to us for a consultation, like, don't just let us be the only firm that you're consulting with before making a decision. Go meet with other firms, make sure that we're the firm for you. Same thing with CPAs. Consult with a couple, interview them, have good questions to ask. If you need to Google questions to ask, which is only so good, but have a list of questions to ask, and that being one of them. Are you just going to file my taxes, or are you going to do some tax planning throughout the year? How many times per year can I plan on meeting with you? What sort of things will we talk about during those meetings? Do you help with these sorts of decisions, those sorts of decisions? Right? Can I just call you up and get a quick answer, or shoot you an email and get a relatively quick answer? I'm happy to pay for your time for those things, right? Because we're all trying to run a business. Yep. And you're not the CPA's only client, right? So, but you need to have somebody you can lean on for those things. And hopefully you have a bookkeeper as well who is keeping clean books.
Right.
And that can be your CPA firm, or that can be a separate firm or an in-house person.
Right. And it probably depends on the size of the company, right? At what point can you justify someone? And what I typically see is you start outsourcing it at first, have someone that because depends on the business volume, right? Maybe they get into your QuickBooks or whatever you use once a month and just clean things up and make sure they look right. And then you graduate to maybe they're in your books once a week. And at some point, it makes sense to have them in-house, because then you almost need them in your books daily, logging things correctly and journal entering and whatever needs done in your business. But that could be your CPA at some point. But typically pretty quickly, you need to find someone who that's their role, is just keeping the books clean and in order.
Yeah, I mean, that really is the root of all the other planning, is if we have good, accurate financial data, it makes everybody's job, yours included, so much easier. And I think it pays to have a second set of eyes on stuff. So to your point, it can be your CPA firm. A lot of CPA firms do that. But it might be worthwhile to have two separate firms do that for a number of reasons. One, I couldn't tell you how many business owners we've worked with. And so one, he was like, I thought of this lady as a sister. She's been with me for years. She managed the books. She was sick, or she was out for, a couple of weeks. So he kind of stepped in and was doing the books. And he's like, I started looking at stuff, and he was like, well, we don't use this card for these sorts of purchases. And it started, digging in, and come to find out she was kind of stealing money from them. And it wasn't a whole lot at once, but I mean, it added up to be quite a bit. It was just a little bit here and there. So having a second set of eyes on whoever's keeping the books is helpful. Having a second set of eyes on your tax returns is helpful as well. So, that's something that we'll generally do, is we'll get multiple years of tax returns and take a look at them. And we're not filing taxes. We're not doing any of that. It's number one, it's good, useful information for us. But number two, it's a good second set of eyes, because we have found a number of times I could bore you with a lot of stories, but we found a lot of stuff that, two brief examples. Local CPA here, and she's a good CPA, but we're all human and make human mistakes. So, we had a contractor client that we reviewed her previous, her kind of fresh tax returns that were done. This was last year. And we found that the CPA miscategorized her income. And that miscategorization caused her to pay about $70,000 more in taxes than she otherwise should have paid. So before bringing it to the client, out of respect to the CPA, we brought it to the CPA first. and said, "Hey, look, I think there was," she was like, "You're right. That was a mistake. I don't know how that happened, but we'll get it corrected." So she knew it right away. And it was just a simple mistake. They literally just clicked the wrong box on the tax return. So, I mean, it's a very simple mistake. But without that second set of eyes, don't know if that would have been caught.
Right.
There was another contractor client that for the past several years, and this was a couple of years ago, but for the previous years, there was a fair amount of their expenses that should have been added towards their QBI deduction that their CPA 1 year could have been a mistake, but they had been missing this the last 3 years. So apparently they didn't know that this expense should have been, should have gone towards your QBI deduction. And so we told the client, said, look, if you can amend and refile your last 3 years in taxes, you're going to get well into the six figures back of taxes that you've overpaid the last 3 years. And then, of course, it'll save you, this tax money going forward. So they found a new CPA because I think, and they had before this even happened, they already, they were like, yeah, we think we have outgrown our CPA. And so that was just kind of the straw that broke the camel's back. But good tax preparer is paramount. Good financial planner versus wealth investment advisor is paramount, and there's a big difference. So again,
Andrew,
yes,
this feels like maybe a good point or a good place to kind of pause the conversation and do maybe this as a 2-part series, because I feel like the CPA and accountant bookkeeper is incredibly important, but just as important is your investment manager versus your financial planner, and then the attorneys, business attorney and personal estate attorney. I believe those are. I don't want to cut those short, is what I'm saying. I think we need to spend some time on those as well. But also, I want to be respectful of your time and respectful of our viewers' time, maybe.
Sure.
So let's do this. Let's circle back around. Let's continue this again as a part 2, where we talk about investment planning, financial planning, and we talk about the different attorneys that you could or should have involved in your financial dream team. All right, guys, if you enjoyed part 1 of this conversation, I think you're going to love part 2 of the conversation. Stay tuned in weeks to come for the second installment of this conversation. For now, Joe Everest, the fence expert, reminding you that good fences make good neighbors.